I'm Charlotte McLeod with investingnews.com, and here today with me is Curtis Moore, SVP of Marketing and Corporate Development at Energy Fuels. Thank you so much for being here. Great to have you.
Yes, thanks for having me on, Charlotte.
All right, really good to have you here. I think usually investors are used to hearing about uranium from you. That's usually where we begin our conversations. But today we're going to focus on rare earths. And I thought what we could do is just explain why we're doing that, why we're going to touch on rare earths first today, and then move on to the uranium side.
Yeah, absolutely. No, thanks for having me on again. I think what a lot of people are missing with Energy Fuels right now is that we are creating a truly diversified critical mineral company. Now, this diversification is based upon our core uranium processing and our core uranium production capabilities, which again remains the heart of our business. But what we're able to do through those capabilities and those licenses and that expertise is actually diversify into some other very important critical minerals needed for the energy transition, needed for clean energy, needed for military and defense requirements and all that. For investors that have been involved in various critical minerals over the years, there can be some pretty wild cycles where prices go very high and prices go very low. And as a business, that's hard to manage through. And so to have exposure to a number of different critical minerals, we think is a great way to build some shareholder value. And so again, we have been and will be the number one uranium producer in the United States, and we haven't walked away from that. And we're still gonna do that. We still have a wonderful portfolio of uranium assets in the United States. However, really no uranium company in the United States will become world significant. There's no uranium company in the U.S. that's going to become a Cameco or a Kazatomprom or even a General Atomics in Australia or something like that. However, on top of this uranium capability that we have, we've been able to bolt on a world significant rare earth business and also a world significant heavy mineral sand business, titanium and zirconium. And so it's kind of funny over the last year or so, I feel like investors have looked at Energy Fuels and they see that 1 + 1 + 1 equals a half, which just kind of boggles the mind. But again, we're still going to be a U.S. significant uranium producer. We have bolted on a world significant and low-cost rare earth business and a world significant and low-cost heavy mineral sand business, especially with this new acquisition with Base Resources and Toliara. And so I do think that a lot of people are missing the boat on this, but we're just going to keep executing and we're going to keep pursuing the business plan, and we're going to create a large, diversified, profitable mineral sand company based here in the United States that's able to compete globally.
Okay, really good to get that context on Energy Fuels strategy. And with that in mind, we're going to continue the conversation on rare earths before moving over to uranium later on. Where I'm thinking we could begin is with the recently closed acquisition of Base Resources. So if you could just begin by sharing details on that transaction.
Yeah, so the transaction was announced on October 2nd, and this was a big accomplishment for Energy Fuels. We think that there are some pretty good arguments to say that this is probably one of the biggest and most important critical mineral transactions in the world in the last many years. So we've acquired the Base Resources, which is an Australian company, and Base has operated a very successful and very profitable heavy mineral sand project in Kenya for the last several years. It's called the Kwale Project, and it's heavy mineral sands, which are primarily titanium and zirconium minerals. But in many heavy mineral sand projects, there's a very important rare earth-bearing mineral that is produced as a low-cost byproduct called monazite, and also a lesser mineral called xenotime. Now, Kwale in Kenya did not have a lot of monazite and xenotime. However, Base Resources is also developing a project in Madagascar called Toliara. And Toliara is widely considered to be one of the biggest and best undeveloped critical mineral projects anywhere in the world. Again, it's a heavy mineral sand project with lots of titanium, zirconium minerals, but it also has a lot of monazite and xenotime, which are very important rare earth minerals. And so this is a big step for Energy Fuels as we develop our critical mineral division. again, which is complementary to our uranium production here in the United States. And we just could not be more thrilled to have closed this acquisition.
Very exciting. And maybe you can share some more details on just how complementary that is, how it fits into what the company is already doing and its overall portfolio.
Yeah, absolutely. I mean, really, the common thread that that connects all of the things that Energy Fuels is doing right now is that it involves the processing of ore stocks and feedstocks that are naturally radioactive. Of course, uranium is you're dealing with ore that is naturally radioactive, and our uranium production ramp up in the United States is going very, very well. Though that's not the topic of this conversation today. But it's a little known fact that every single major rare earth bearing mineral, when you dig it up out of the ground, is naturally radioactive because of there's uranium and there's thorium that's bound up in those minerals. And that's not unique to monazite or xenotime. That's the case for bastnasite. That's the case for even ionic clays. When you're in the rare earth business, you need to be able to deal with the radioactive component of these ores. And so we have an underutilized uranium mill in the United States that just happens to be perfectly suited to processing those ores. We're also recovering the uranium out of those ores for sale into the U.S. nuclear industry. But we've also recently proven up our ability to process this monazite and this xenotime into rare earth, separated rare earth materials, which is a huge step for the United States as we try to reshore and bring these capabilities back to the United States. And so that's really that's the common thread there. Now, out of these mines, these mineral sand mines that we are acquiring in the Southern Hemisphere, again, this started last February or a year ago February when we acquired our Bahia deposit in Brazil, which we're advancing right now. Earlier this year, we announced that we closed on a joint venture on the Donald project, which is a big mineral sand deposit in Australia. And now we just closed on the base deal, which includes the Toliara deposit in Madagascar. And again, those are all heavy mineral sand deposits, which primarily produce titanium and zirconium, which will go into global markets. But our plan is to bring these monazite and xenotime concentrates back to the United States, back to our mill in Utah, where we can process those feedstocks, extract the uranium. We can extract the rare earths and again bring these critical minerals back to the United States.
Right. I think that starts to give an idea of how this is just another piece in the puzzle that you're assembling there. So one thing I'd be interested to hear a little bit more about is, so the company's acquiring these deposits. What is the advantage of doing that versus, setting up an offtake agreement where you can just acquire supply?
Well, that's a great question. And honestly, when we first entered the rare earth space about 5 years ago, we thought that we'd be able to offtake this monazite and xenotime because right now, these monazite and xenotime concentrates are going into China. It actually comprises a big part of China's rare earth industry. And so when we came on the scene and we realized that we had the capabilities, we had the licenses, we had the infrastructure, we had the expertise to process these rare earth feedstocks at our mill in Utah, we figured that if companies had the choice between selling their monazite to the United States versus Chinese companies, that they'd be willing to sell some to the United States. Well, what happened was these Chinese companies raised the price that they were willing to pay for monazite and xenotime feedstocks to the point that it really took any margin away from us. Therefore, we realized that we needed to secure our own supply chains. And so that's why we have decided to enter into these industries, getting the Bahia project, the Donald project, and now the Toliara project. And what's just for scale, those three projects should produce enough rare earths to supply on the order of 6 million EVs per year, for instance. We expect to be able to be producing rare earth oxides at a scale of Lynas, which is the largest non-Chinese rare earth producer in the world, based in Australia, and also MP Materials here in the United States. They have designs on getting up to 5,000 or 6,000 tons of NdPr per year. And these projects have a very good heavy rare earth component to them that we can process at the White Mesa Mill. So, we're creating a company that is on the scale of a Lynas and an MP Materials on the back of our uranium business. And by the way, we're also going to have some large scale heavy mineral sand projects, the titanium and zirconium projects, which are really the main products to come out of these heavy mineral sand projects. Again, this monazite and xenotime, the big advantage of that from a supply chain standpoint for us is that it's very low cost or even free. The titanium and zirconium, those products actually support most of the economics of these projects. And then to be able to get another very valuable project off the, kind of on the side, this monazite rare earth mineral is a huge advantage. So we actually think that we can be very, very low cost in the world and competitive with China. And we look forward to getting these projects up and running and producing large scale separated rare earths in the United States here in the next couple of years.
Okay, definitely a number of avenues to follow up on there. And one point I want to pursue, so you mentioned securing your own supply chain. And I think every time I talk to you, I ask you about, the broader supply chain security question about countries doing that. So anything you would add there about at the country level, the importance, especially right now, of securing those supply chains of these key materials?
Yeah, no, that's exactly right. I mean, the best thing about securing your own supply chains is that you also control your own costs. We're not going to be competing against other companies or other countries for this monazite feedstock. Monazite is a great mineral for producing rare earths. It has excellent distributions of both the heavy and the light magnet rare earths that are needed for, again, electric vehicles. They're needed for wind energy, military and defense requirements, and all that. And so, again, it really comes down to us controlling our own costs. And so when you have these projects that are where the economics are primarily driven by the primary titanium and zirconium production, and those markets are interesting as well. They're basically industrial material markets. Most of the titanium in the world goes into paints and pigments and things like that. Most of the zirconium in the world goes into ceramics, things like that, tile, things like that. Of course, there are some very strategic and high-tech uses for titanium, zirconium, but that's really what drives the economics of those markets. And so the outlook for those markets is very positive. But then to be able to add on this rare earth component is extremely valuable. Just again, for context, the Toliara deposit in Madagascar that we just acquired through the base acquisition, that project had a NPV of about $1 billion just on the titanium and zirconium production. They base a couple of years ago added on monazite production. Now, this was simply producing a monazite concentrate and selling it into the global market, and that actually doubled the NPV of that project to $2 billion. Now, we have the ability to actually take that monazite, bring it to the United States, and process it into separated rare earth oxides. And so that should, but we haven't redone the economic analysis yet for public consumption, but that really supercharges the economics of just that project alone. And again, it will be at competitive prices, low cost. We think will be among the lowest cost in the world outside of China, if not the lowest cost. And we have heard from a number of end users that they would like to diversify their supply chains. And so we think that this acquisition, all three of these acquisitions, with this one being the latest, puts us in a great position globally.
Anything you would add there on the titanium and zirconium markets? Because I'll admit, these are not markets that I'm familiar with, and I think investors also may not know too much about them. What I'm getting from your comments so far is these are pretty stable markets, but yes. Anything you would add?
No, that's exactly right. These are stable markets. They have a really positive long-term growth profile. Again, they're mostly industrial material type of markets. Some of the other companies that are involved in that would be like an Iluka out of Australia, or a Tronox here out of the United States. And so I will tell you that one of the great things about the acquisition of Base Resources that we just completed is that we're acquiring a management team. We're acquiring a team of professionals that have operated a profitable heavy mineral sand project in Africa for the last many, many years, the Koala project in Kenya. And so, again, we're uranium miners here at Energy Fuels. We're not heavy mineral sand miners. And so to be able to get this management team that has that successful of a track record in that industry is another big, I'd say maybe sort of unnoticed part of this acquisition. So they'll run those projects, they'll develop the projects, and then the whole idea would be to get that monazite feedstock here to the United States for processing into rare earth oxides.
Okay, right. And I think we should definitely talk a little bit more about the integration of all these new assets into what you're doing. So good to hear that there will be the management team over there kind of doing what they do best. You can do what you do best, but you have added really quite a lot of assets to the company in the last couple of years, really, I think. So how will this proceed in terms of getting them all working in tandem?
We intend to keep the mineral sand division intact. And the base resources management team will have probably the most oversight over that. All of these mineral sand projects that we've acquired are all in the Southern Hemisphere. Base Resources is headquartered in Perth, Australia. We intend to keep that office open and that office operating just as it has for the last many, many years. And we'll expect the base team to also help oversee the Donald project in Australia and the Bahia project in Brazil. And so that's we expect the integration to go quite well because we expect the people to come in and do the job that they've been doing for the last many, many years. So we don't expect any issues with that. It just works together very, very well. And like I said, we wanted to secure our own supply chains for monazite, but we weren't mineral sand operators. And there are nuances to that market and those operations that we just don't have internally here. Well, now we do. So that just, I think, de-risks the entire enterprise that much more. And we look forward to seeing how it all rolls out.
Okay, and what levels of rare earths production can investors expect moving forward? How is that going to play out?
Yeah, so between those three projects, we expect to be able to produce about 5,000 to 6,000 metric tons of NdPr oxide. NdPr, that's neodymium and praseodymium. Those are the light magnet rare earths. In addition, we expect to be able to produce on the order of about 300 to 400 metric tons of dysprosium and terbium oxides. Those are the heavy rare earth, the heavy magnet rare earth elements. And so that's also what we are expanding the White Mesa Mill in Utah to be able to accommodate the production of those levels of materials. Probably won't happen for another 2 or 3 years, I would say. We need to expand the mill. We need to get these projects up and running. Though the Donald project in Australia is pretty shovel ready. And so depending on what markets do, we could be making an investment decision on that project here in the next, let's say 6 months, 12 months, something like that. And so again, when you're talking about those levels of rare earths, that's about the same size as a Linus or an MP Materials. And so we expect to be highly competitive on costs. And we have heavy rare earths, which those companies don't have as much on the heavy rare earth side as we have. So I think we bring a lot of unique advantages to the table, and we look forward to getting those projects up and running and bringing that production back to the United States. And in the meantime, in the next 2 years, we'll be focusing on uranium production while we get these projects up and running, while we get the mill expanded. Part of the expansion at the mill is to enable us to produce both uranium and rare earth oxides simultaneously, which we don't have that capability right now. And so we'll be licensing and building out those capabilities here in the next couple of years. And so it really is going to come together very, very nicely as those mineral sand projects in the Southern Hemisphere come online, feeding monazite into the mill for processing into rare earth oxides. And what we're hearing from end-use customers, EV manufacturers, magnet manufacturers, is that the real need for rare earth oxides is coming more kind of toward the 27, 28 time period. And so I think the timing works out extremely well as these projects come online to feed market needs.
Right. And I will make sure to go over to uranium before we finish, but just on the note of the markets for rare earths, I know that, of course, these are very important materials, but it kind of feels like sometimes we see these spikes in interest, something happens in China, and until then it gets a little bit quiet. So anything more you can say about the timing there and the markets for these metals?
Yeah, I mean, look, a lot of the market for rare earths right now is driven by magnets and by electric vehicles. but also plug-in hybrids. I mean, people need to realize that plug-in hybrids basically need the same amount of rare earths as electric vehicles. And even if pure EV adoption is maybe going a little bit slower, consumer adoption is going a little slower than a lot of people maybe expected, plug-in hybrids are doing quite well. And so there's a lot of need for these materials. And right, markets are a little soft right now. They've actually come back a little bit here recently. I think NdPr is around $60 per kilogram right now, which is a pretty low price. I mean, I think it was around $130, $140 a kilogram just a couple of years ago. We don't need prices back at $130, $140 a kilogram by any means. We actually could probably break even at today's levels, which is a pretty nice place to be. Assuming full build out and production in the future. Yeah, and it's just there's more demand for electric vehicles, more demand for renewable energy, military and defense requirements. Certainly in the United States, we need rare earths for defense systems and those kinds of things. We hope prices are going to certainly go up a little bit from here. But in the meantime, if you're the lowest cost Western non-Chinese producer, that's a good place to be. End users, they want diversification. They don't want to just be buying all of their materials from a single source.
Okay, I think really valuable to go over that. And I'll move to uranium now. We'll discuss that at least a little bit. So uranium, very interesting, I think, what's happened since we last spoke. What I hear from all the experts I speak with is supply-demand fundamentals remain very positive. The outlook is strong. But I know among investors, sentiment certainly has taken a little bit of a hit. So what is your sense of the uranium sector right now? What might you say to people who are looking at it and hoping for a little bit better of a performance from the price?
I mean, I honestly have to smile a little bit when people are disappointed with the uranium price of $80 per pound. I mean, sure, earlier this year, prices spiked up over $100 per pound. And they've settled back a little bit to $80 per pound, plus or minus. That's still a great price, especially if you look back over the last couple of years. And again, this is the time for people to kind of put their money where their mouth is. Who's going to be able to produce? Who's going to be able to produce profitably? Who's going to be able to sign long-term contracts? Our production ramp up is going very well, and we've we have a portfolio of contracts to sell our uranium to U.S. nuclear power plants. We recently signed another contract in the last couple of months or so. We think we're probably one of the better positioned companies in the world, and certainly in the United States, to meet expectations on that front. And so, from an investment standpoint, the long-term fundamentals look very, very good. But again, don't forget that $80 per pound is still a pretty nice price. And so, so don't get too down on this market when the price has come up to much more sustainable levels. Though there are a lot of reasons to believe why it could go much, much higher, and we hope and actually expect it to do so.
Right. And on the note of price, I had one point that I wanted to get your take on. So something I've started to hear is right now we should really be looking at the term price and not focusing so much on the spot price. But of course, the term market is pretty opaque, hard to get a handle on what's happening there. So I wondered if there's anything you can share in terms of you have conversations with utilities, anything you can say there.
Yeah, I mean, I would focus more on the term price for sure. Because that's just where more uranium transacts is on the term market. I mean, all I can say is, based on what our conversations have been, there certainly has been more interest among utilities for signing long-term contracts. And again, we signed another one ourselves, our fourth one, just in the last couple of months. And, it's just, the spot market could be so volatile. If you're a producer or a consumer of uranium, being exposed to such volatile markets it creates a certain degree of risk and uncertainty in your own business. So there's a lot of incentive on both sides to sign longer term contracts with a little bit more certainty. And certainly we fall into that category as well. I mean, we've only probably committed maybe a quarter of our production into long-term contracts at this point. And we intend to sign more contracts as the price continues to go up. But we've been making profitable sales on our contracts, and look forward to doing so for the next several years.
Okay, I think that hopefully that covers the rare earth side, a little bit of the uranium side. But before I let you go, I'll put it back to you and ask if there's any final thoughts you would share with investors. I think it's a really interesting situation for the company right now, as you have all the good stuff going on in uranium, building up the rare earth side. Anything you would add?
Yeah, I mean, I think I do think that a lot of investors are kind of missing the boat on Energy Fuels, where they see us making investments in rare earths and mineral sands and not just plowing money into uranium. We already have a very good uranium portfolio in the United States. We're still going to be the leading U.S. producer of uranium in the United States, certainly in the next several years. And so, we haven't relegated our, or walked away from that position at all. We're building on these other businesses, on top of our uranium business. But at some point, people are going to start to realize what we have put together and the magnitude of business opportunities that we put together. And hopefully shareholders will be rewarded very soon.
Okay, well, thank you very much for explaining what's going on at the company right now. We'll catch up with you in the future. Maybe we'll go over to medical isotopes at that time, but really good to have you. Thank you so much.
You're very welcome. Thanks for having me.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Curtis Moore with Energy Fuels. Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.